if you did serve in the military, are in the military, or did serve in the military, definitely something you want to look into.
100% take advantage of it. It's a benefit for you. We thank you for your service, and you should 100% use it. Absolutely.
Yeah. The benefit of the VA loan is you can put zero money down. So not a dime to put down. There is a thing called a funding fee, not to get too much into it. That's something obviously you would discuss with your loan officer. To avoid PMI or mortgage insurance with VA, they charge you a one-time upfront funding fee that's rolled into your loan. So you don't pay it out of pocket, it's rolled into your loan. The only way to not pay that is have at least 10% disability through the VA.
Okay. Is there too a limit? I mean, they, from what I remember, and I don't know if it's still like this, you could borrow up to, was it like 500,000 for that loan, for a VA loan? And then, but I mean, you could borrow up to 500,000 for that. So like, I had, someone owned a home, but they were able to buy another home because they were still within their limit on that. Does that make sense?
Yeah. Yeah.
I think you only have one VA loan at a time.
No, that's not true.
Oh.
You can have as many VA loans as you want. So there's a cap, right? So there's a loan cap. So what we do is we pull it, it's called a COE, or a certificate of eligibility. And you can have, say, one loan that you have, whatever, $100,000 loan amount on, and that's the guaranteed amount through the VA. And then they can buy another home that's, say, another $100,000. And as long as they're under that cap for the eligibility, they can do it. So, and even if you go over that cap, you still use whatever's left of the guarantee and just put a little bit more money down. That's all.
So, quick question though. I thought VA had to be owner occupied.
Well, it does. But say hypothetically, you buy a starter home as a first-time home buyer with a VA loan, and then you want to upgrade, you have children, get married, and you want to keep that home to, rent it out, or you just don't have time to sell it, then you can still use your VA loan on the primary resident that you're upgrading to.
But you can't have a VA loan on both of them.
You can.
Yes.
But how is it? It will be owner occupied. So how is that technically legal?
Well, it will. I mean, we just have to prove that you're moving into the house as a primary resident, right? So, I mean, I've had clients like, say, hypothetically, you buy a house in Texas on a VA loan. You get a new job in Ohio, and you want to use your VA loan. Well, you can do so. So you can either sell that house later on when you close on the house in Ohio, keep it as a rental property, as long as we can prove that the home that you're buying using your VA loan is your primary residence.
They don't look at the other loan.
A little bit different.
Yeah.
Oh.
Correct.
Yeah.
I didn't know that.
Yeah, it's just the cap you have to say.
Right. Yeah, there's a cap. FHA that's different. So the only way you can have two FHA loans is if you have enough equity in the house, or you can prove that the house you're leaving is not good enough for your family. You're having a baby or something like that. So a lot of more loopholes to jump through for an FHA loan where a VA is not, as long as you're in that cap.
Okay. So for qualifying for an FHA loan, it's a lower credit score. So someone with a lower credit score could get that. There's also PMI on it, if you can explain that, and that stays for the life of the loan.
And it's also a lesser down payment than a conventional.
Is it, or are they the same now? Yeah.
I have 3.5 to 5.
Yeah, but conventional is 2.
Conventional is 3.
Oh. But isn't it a higher credit score to do that? Or not not a higher credit score, but isn't it a higher interest rate to do that? 3% conventional? No?
No, as long as, you don't, the PMI could be a little bit higher, the mortgage insurance.
Okay.
Yeah, but no, you can do 3% down. So that's kind of like we were talking about, like you have a conventional, you have your 3 main categories, but then you have like subcategories for each single one.
Okay.
Yeah, so like you got to go to the doctor, right? You don't go to WebMD. So what you have is So conventional loan, basically what that is the difference between a conventional and FHA is FHA is insured by the government, right? Mm-hmm. So the mortgage insurance, PMI or MI, what people want to see what it stands for. MI is mortgage insurance. PMI is private mortgage insurance. Private mortgage insurance is on a conventional loan. Oh. MI is on an FHA loan. Ah. So it doesn't matter.
But are they two different things, right? I mean, it's the same, but it is two different things.
Yeah. So the difference between an FHA insurance, mortgage insurance, and conventional mortgage insurance is FHA is a flat rate. So no matter what your credit score is, no matter what it is, they're going to charge you, and the mortgage insurance premium is going to be a flat rate no matter what, right? But it is on there forever, unless you refinance out of it or sell the home. Whereas a conventional loan, it's going to be based on the program. It's going to be based on your credit scores, your down payment, all that stuff. So like car insurance, right? So if you have bad driving records, speeding tickets, DUIs, hopefully no DUIs, but you're just like a crappy driver, your premium's going to be high, right? So your insurance is going to be super high.
Yeah, ask my kids about that.
Risky, yeah, so as long as you're a good driver and you're less risky, then they're going to have a lower premium. And that's the same thing with a conventional PMI, private mortgage insurance, because if you don't have 20% down, it's required. And what we do is we shop it around with, there's probably five or six main mortgage insurance companies for conventional, and we'll shop it around with them to see who gets us the lowest rate for our clients, and that's who they go with.
That's the winner.
And the difference between, and then what the difference between that and FHA is the mortgage insurance, the PMI mortgage insurance will fall off of a conventional loan after you have enough equity in the house. Mm-hmm. So it goes away.
Interesting.
Mm-hmm. There's a lot of nuances.
There's a lot.
The credit score is really the
I know I don't look that smart, but I'm pretty smart.
Hey, I know you are. You're a wizard. Wizardy wizard. That's
right.
Dr. Livingston, the mortgage doctor wizard.
I presume, yes.
Yes.
Am I a house wizard?
Yes.
Huh?
I was like, am I a house wizard?
Yes. You and me both, sister.
Separate people.
Two different people, not the same, but we're both wizards.
Right.
We're just in each other's brains. That's it.
Yeah. Yeah. There's a lot of nuances with mortgages, and there's a lot of programs. Like, Amanda, to your point, like if your loan officer is not going over a lot of different options with you, they're doing your client a disservice. Mm-hmm. Because a conventional loan is actually less of a down payment than an FHA loan.
Okay.
Like you said, though, yes, if you're not a first-time home buyer, then your rate might be a little bit higher, and your PMI, your mortgage insurance, can be a little bit higher because there's no equity in the house, right? If you're a first-time home buyer, then you may fit into one of those subcategories of conventional, which is a home ready or a home path program.
Okay.
And if you fall into those categories, then your mortgage insurance is going to be lower. You're going to have a good interest rate, even if you're putting 3% down.
Okay.
Yeah.
Yeah,
but
I think I've had
someone
do like a lesser down, but it was a long time ago too. It was years ago. So I'm sure things have changed too.
Oh yeah. Well, that's the thing. Things are changing rapidly right now. Yeah. Right. Programs are coming. Programs are going. It's ever changing. I mean, right now, especially with COVID, products and guidelines are changing every week. So we have a call every single Monday just to go over, what the changes are, what to expect.
Yeah.
So you really want to make sure, if you're buying a house, refinancing, whatever it is, that, you're up to date with your loan officer is going over all the options and being on top of everything. So.
Yeah, for sure. It's I can't even imagine what all you have to keep track of. Fortunately for our side of it, it isn't. I mean, what we're dealing with is just trying to figure out how to get people a house. But that in and of itself is another.
Like, so are they.
What can we give up now to get?
Right.
Yeah.
Anyway, Amanda, you need to go, right?
I do.
Oh. Well,
we'll go get them in contract.
Yeah.
I hope so.
Yeah.
Send them to Rob. Rob will get you in contract. Rob will get you the magic.
They're actually a cash buyer.
Oh, never mind.
A lender.
That doesn't even matter anymore.
No. It doesn't. Yeah. It doesn't matter. I'm not saying that it does. I'm just saying like.
No. Yeah, no. I know. I'm just saying. I'm just merely commenting that cash doesn't even mean anything anymore.
It doesn't. So.
Yeah.
Well, thank you for joining us, Rob. It's always a pleasure.
Yeah.
If you have any other questions?
Yeah, my pleasure.
So
What's that?
I said, if you have any other questions, let Rob know.
I'll link. Rob's linked in the title, so you can reach out to him that way. But we can add him in the comments too, so you can call him.
Yeah, and what I would say is no question is a dumb question, and
100%.
I know a lot of people a lot of people think that they're scared to start the process. It's all confidential. Everything that we go over is just going to be, it's a great way to plan for the home that you want, because the last thing you want to do is start looking at houses, fall in love with a house, and you want to put an offer in, but then you realize it's way too much. It's out of your budget. So it's always good to start with us to figure out what the best options are, how to improve your situation to where we can get you the best loan, the best rate, and the best product for when that time comes.
Yeah, and it's no obligation. Well, you just said that, but it's not just because you're starting the conversation does not mean you have to buy a house tomorrow.
Right.
So don't worry about that.
And it's free, completely free.
Right.
So some people have asked me, is there an application fee or anything? You don't pay anything.
No.
So.
Yeah. That's good to know too.
And there's a lot of information out there. I don't know, like we could probably talk for 2 hours on this and still not scratch the surface necessarily. So feel free to ask anything. I have a client right now. I'm like, just ask, like whatever. You don't know what you don't know. And listen, I'm 7 years in. So are you, Amanda, probably the same thing. I still come up with stuff that I have never heard of before or have any idea on. So it is what it is. Ask. So, all right. I will end this. Yeah, exactly. Right. Knowledge is power. So you all have a wonderful day.
Sell your house.
That's what we need.
That's what we really need.
What we need is some people to sell. Maybe I'll sell my house.
I know.
Yeah.
Who wants to buy it?
I'm always like, maybe.
There's a lot of work that needs to happen in this place. Rob, you sell your house.
Okay. Done.
I like it. It looks good. All right, Amanda's like, I got to get out of here.
See all the bourbon bottles I got?
Yeah.
I just see that.
Yeah.
I like it.
The important things.
Yeah.
That is the important
The important stuff. Yeah, I need that.
All right, you guys have a good day.
Bye.
Bye.
All right, see you guys. Bye.